Now, from a equity growth, stage of growth perspective, there's a cycle that you go through. So initially you would have more venture capital, private equity that plays a role, and maybe even family and friends and own funding. And then as you proceed on the growth trajectory, you become profitable and you produce cash flow, then it will make more sense to consider a listing as you go to a more mature stage in your development. So typically in a company's life cycle, there are different stages. The initial stage is when you're smaller or you're a startup, you would look toward venture capital and private equity funds supporting you, as well as family and friends, and maybe utilizing own capital. Then as you progress, and your cash flow improve, you will start looking at third-party finance from a debt perspective, whether that's a bank or a financial institution or a bigger private equity firm that can assist in the journey going forward. Then when you reach a stage where you want further permanent capital that can take you to the next level or can assist in your growth trajectory, you will consider a listing. And at that stage, I suggest you contact approved JSE sponsor to assist you to analyze your particular situation, because there isn't one size fit all. There are trends and there are scenarios that usually enables you to consider a listing, but it can depend on your specific circumstances. For example, if you start producing profitability and you will be considered to be eligible from a listing perspective, but that is not necessarily the case. If you have a compelling growth story, for example, Curro is a case in point, and you do not have the required minimum profitability from a pre-tax perspective, you can also consider a listing and go to the Alt-X rather than the main board of the JSE. So it really depends on your specific circumstances. If you look at what the requirements of a listing is to raise capital, an initial IPO, that enables you access to permanent capital and other alternative sources of capital. You can look at the main board from that perspective, and there it is from subscribed capital perspective, 50 million. And if you look at the Alt-X next to that, that is 2 million. Then if you look at, do you need the profit history or not? You do need the profit history for the main board, at least 3 years. And for Alt-X, you do not require that, but you need a business plan. How much profit do you need to make? You need to make at least 50 million pre-tax, where in Alt-X you don't have to make that. On a main board, you require 20% public shareholders, and on an Alt-X, 10%. Obviously, there are certain carve-outs around that. There is, for example, from an infrastructure perspective, you may get certain dispensations if you have feasibility studies in place, licenses, take-off agreements, and the like. The same applies to a private equity fund that wish to list. Although you need a 3-year audited financial history, there are certain carve-outs, but you need a 20 million profit after tax. So in order to ascertain the exact details, you should go to approved sponsor, of which PSG Capital is one. We have listed numerous companies over the last 24 years. We at the moment act for about approximately 40 listed companies on the JSE, whether they are smaller market cap companies or top 40 listed market cap companies. We can assist you from Cape Town or Sandton.
Different businesses have different life cycles and they have different reasons for listing. There's a number of companies that want to come for a listing where they're looking at mining. And the JSE has traditionally been the place to actually go out and raise capital. Also, as I mentioned before, they actually have, if they've got an expansion strategy, when you're looking to expand, you need to source funding from some source. So Whether or not you source it from a bank, you're going to have to report to bankers. And they often take a whole load of extra security, along the way. Or else you might have a private equity partner. A private equity partner typically will come in. Very few are long-term partners. They normally have a 5-year to 7-year investment horizon, and they ultimately want to be bought out at a price by the business because they need to close their fund. When you go for a listing, you have access to permanent capital, and you have to report to the general public. And so in each of those instances, you are reporting, and you've got different covenants, different requirements, different obligations. So listing certainly isn't for everyone. It is a source of funding, and it is a source of exposure. And sometimes people, they just have had a passion all of their lives to actually be listed and operate in a listed environment and grow their companies. Sometimes they list for strategic reasons in terms of profiling, to be able to access business overseas and have that recognition of the standards, the regulation, the corporate governance. So there are many reasons, why a company would want to list. You've got your younger companies that are accessing growth capital or see an opportunity in the market where they can actually consolidate an industry or do acquisitions where their balance sheet alone would not allow for debt funding to be able to do the acquisitions, but a merger or a joint initiative to list or do a listing and then do an acquisition post-listing is often one of the reasons. So I think they are numerous, but listing definitely has its place, and I think people have forgotten. There's been a spate of delistings of late over the last 3-4 years, but what we've seen over the years is all of these things are cyclical. It becomes popular to delist when markets are down. Management know the value of their businesses, and they will often exit, because the market's not placing a value on their shares, and they see the value, so then they're able to go and get that debt funding to do the buyout. But then you also have a season of rights offers, and you'll have a season of new listings, when the market is buoyant. But at the moment, funding is scarce, and banks are scared. So if you do have a growth strategy and you want to grow organically or grow by acquisition, then listing is a very real option. You've just got to be really serious about it.